Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Chauskas. Today is the 29th of October 2019. So, welcome, everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, see how everything's getting along right now. But as always, before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also just a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD Research tab here, which you can always click on, and it will take you to our analysis that we do on a daily basis. And I believe you can find a lot of useful stuff here, guys. But for now, let's jump into the charts. Now, the first one I want to touch on here is the DAX, so the German index. So I haven't looked at this one for quite a while, and of course, as you know, as you follow the indices and in general the markets, you know that we are on the US ones. We are, or should I say specifically S&P and Nasdaq 100, we are hitting the new all-time highs. On this one, on DAX, yes, of course, we're performing quite well. We are hitting a new high for this year, and to be more specific, yesterday we did that. And yesterday, the index managed to reach the area near the roughly around the 12,986 zone. So it just failed by a few points of reaching the psychological 13,000, and then kind of drifted a little bit lower. So looking at the cash index right now, because the market is still not open, looking at the cash index right now, it is currently near not far from its closing price yesterday. So in a way, we are going to continue monitoring the upside, given the current risk-on environment, due to the current risk-on environment. But in order for us to get comfortable with the upside, a push above the 12,986 zone would be needed. And then, of course, maybe just for that extra confirmation, a push above the psychological 13,000 level could do the trick as well. And then, yep, we could aim for higher levels. And this is not the all-time high for this index. I mean, let me just jump into a weekly chart on this one. You can see that the all-time high for the index was around, and let me just quickly put this one on the chart. There we go. So that was near the 13,597 territory. So that was the all-time high for this index. As you can see here by this chart. But for now, the index seems to be traveling in the correct direction for the bulls, of course. But again, before we could examine higher levels, ideally we would like to see a push above the yesterday's high, and then just for that extra confirmation, a push above the 13,000 level. In that case, we will then aim for the, and let me just bring in daily chart here. Then we will aim for this area of resistance near the high of the 22nd of May, and that's approximately around the 13,204 and 205 territory. So around there. So this could be our good potential target for DAX here. And then of course we'll take it from there, because in a way it could stall there, and in a way we could see the price kind of holding around here, maybe then correcting back down, and yep, we'll take it from there. But for now, it seems that it's looking quite positive, especially if we see a push above the yesterday's highs. If this index decides to travel back down, one level to keep an eye on is around here, guys. So that's roughly around the 12,815 territory. So a drop below this would also place the the index below its 21 EMA on the 4-hour chart, and then we could target the level around the 12,700 zone, or even going a little bit further here towards the 12,604 area, approximately around there. So some of these good levels to watch, of course, but in order, like I said, for us to consider, let's say, a bit of a decline here, we would like to see a drop below the 12,815 zone. So keep your eyes on that one. Gold, of course, the whole risk-on environment and the indices is not really helping here to this. Well, it's not helping this precious metal. After we had a nice push above the upper side of this falling channel formation, and this is what I was talking about, guys, for the past kind of couple of weeks basically. So what I was saying, that yes, even if we see a push of through the upper side of the falling channel, yes, this could increase the chances of a further move higher, but for us to get comfortable with the upside, with further upside, a break above the 1520 zone would have been needed, or should I say it's still needed. So that's why for now you can see that this precious metal, this commodity, did travel, almost managed to reach this 1520 zone, but quickly reversed back down and dropped back inside this falling channel formation. So for now, this of course doesn't paint a very positive picture. Everything's looking more bearish than bullish, and especially if it starts dropping below the lows of yesterday. And let me just quickly put that on the chart, and that's roughly around the 1490 zone. So if we see a drop below the 1490, then we will start aiming for slightly lower levels here, guys. And one of our good areas of support is around here near the 1475 zone. But again, be very careful. If it let's say, travels somehow back above this upper side of the falling channel, and pushes above the 1500 level, then we'll remain neutral here, to be honest, because like I said, still for us, the more comfortable level in order to examine the upside is the 1520 zone. So keep your eyes on that one. USD CAD, so continues to drift lower, slowly, of course, not drastically, but lower. So that said, of course, on the one hand, if we would consider our indicators here, the MACD and the R squared, yes, there is a possibility we could see a push higher. The only thing is that still for now, both indicators are yes, they have bottomed, they've moved from their bottoms, but now they're kind of aiming, they're pushing higher, but still there is a bit of a way here to make for them in order for us to get comfortable with the upside. So but we'll probably forget about those just for now. What we're going to do here is mainly monitor some key potential breakout points. So yesterday the pair did try to push higher, but failed near the 1.3078 zone, and that was around the 21 EMA. So as you can see how well, looking at this 4-hour chart, by the way, you can see how well this 21 EMA together with the 20 SMA inside the Bollinger Band is kind of keeping the rate down. So in a way, how we could play this one out is, for example, for today, if we see a push above today's pivot, which is roughly around the 1.3059 zone, then yes, it could increase the chances of a further move higher, but still we would like to see that good strong push, and maybe actually even would like to see a close of at least of a 4-hour candle above this 21 EMA here on the 4-hour chart, and then we'll start considering higher levels, especially if it pushes above the 1.3078 zone as well. So that's why, guys, for now, from at this point in time and looking at this chart right now, if we get a push above the 21 EMA and a push above the 1.3078, this could lead towards something more interesting for the buyers, and we could then start targeting slightly higher levels. Initially, we'll aim for the 1.3123, or then we could aim for the 1.3166, or even the 200 EMA here on the 4-hour chart. So who knows? But for now, let's keep it short and simple. In order for us to get comfortable with higher levels here, we do need a few strong breaks here, and there are some there's about three obstacles basically. The today's pivot point at 1.3059. Then we have the 21 EMA on the 4-hour chart, and this key area of resistance near the 1.3078. So that's why, guys, that's why we'll wait for the last one here in order to aim for higher levels. In terms of the downside, of course, there's more chance at the moment, more chance for this one to drift lower, but just for us to get a little bit more comfortable, a drop below the 1.3036 zone would be required, and then yep, we will aim for lower areas. We're not far from the 1.3010, which is the lowest point of July. So a good potential target, but again, we'll get comfortable with that if we see a drop below the 1.3036 zone. So keep your eyes on that one. USD JPY. So it's quite an interesting picture here. So of course, as you know, well, the yen pair is kind of selling off a little bit because of the risk-on environment. I mean, everybody's kind of leaving the safe havens, and you can see you saw that on gold as well. So the technical picture here kind of paints, and this is what I was talking about last week, basically, that when I was covering this one, and basically I was saying that we needed to see a nice good push above the 108.90 before we could examine higher levels. As you can see, the pair did travel higher, tested the area just slightly above the 109 zone, and but now it's kind of balancing not far from this 108.90, not far from this a bit of a I would say it's a bit of a tentative short-term upside line here, taken from the low of the 4th of October. It's not far from there, and in a way, of course, looking at this picture, yes, there is still more chances for this one to drift higher. This is what we're going to be targeting, but given the proximity to the upside line and this key barrier here, the 108.90 zone, then we'll remain very cautious and careful here, because if this suddenly starts dropping and we see a break of this upside line, then we will consider a possible move lower, where we could aim for the 108.22 zone, this key area of support around here. So, but again, of course, before getting excited, we would like to see also a drop below the this 108.63 territory around here, and like I said, before getting excited with further declines, that's what we would like to see first. So this way the rate would be placed below its 21 EMA and also below the 50 EMA. So in a way, kind of increasing the chances for a further drift lower. But again, coming back to the same story, as long as we remain above this barrier here, the 108.90, and above this upside line, there is still a bit more chances for this one to drift higher. So that's why, guys, for now, stay sharp, be very careful here. Everything might change very quickly, so keep your eyes on some of these levels. GBP Aussie. So haven't looked at this one for quite a while, and I wanted to show you something interesting here. So overall, of course, we are moving higher, and let me just show you this. So you probably, if you follow this, oh, there we go. So just a second, one moment. There we go. So this upside support line taken from the low of the 30th of July. So it continues to keep the rate higher, given that, of course, we have managed to push away, kind of, what should I say? We managed to distance ourselves here from this upside line. Still, the overall trend is more to the upside. The probably more medium-term trend is more to the upside, of course, but the short-term one is starting to kind of fade away here and starting to move lower. And you can see that the pair is currently trading below this little tentative downside resistance line taken from the high of the 16th of October. Now, some would say that maybe it's a bit of a bearish indication. Of course, yes, I mean, there is a possibility for this one to drift further down as long as it remains below this downside resistance line. And also, somebody's probably saying here a nice a descending triangle formation as well. So, but yes, of course, these tend to break to the downside according to textbooks, but of course, before we could examine that, before we could consider that, we would need to see a drop below this level here, below the 1.8717 zone, roughly around here, which is marked near the highs of the 14th of October, near the low of the 17th of October. So a drop below this could, in a way, increase the chances of a further move lower, and then we could target this area around here, around the 1.8516 zone, which also could coincide here with the 200 EMA by the time it could travel lower. But also what I wanted to show you, and just something to keep an eye on, basically. So on one hand, yes, we do have ourselves a nice descending triangle, but to make a little bit things a little bit more confusing, we do have a potential falling wedge as well. So this falling wedge, and I do understand we do have a bit of an overshoot here, but just to keep that in mind, guys, basically, just to, so that it wouldn't come as a surprise maybe at a later stage. So of course, the falling wedges tend to break to the upside, but some confirmation is needed first. So in a way, if we will consider this as being a falling wedge, then a break of the upper side of it and a push above this this recent high near the 1.8857 zone would be needed. So we wouldn't just assume that yes, we will aim for higher levels here straight away. No, we need some confirmation breaks. So in a way, that's why, guys, if we will consider this as a falling wedge, then we need to see a break of this of the upper side of the wedge and the break of the 1.8857. If this is going to be still a descending triangle, then how you could play this one out, of course, you could not rush into well, let's say selling here at around 1.8717, and of course in general I'm not kind of suggesting anything here, but probably more convenient level here to have a look at could be near the lower side of the wedge as well. So even if we consider this to be a descending triangle, we'll keep an eye on the lower side of the wedge, because a drop below this could in a way increase the chances of a further slide here, and at the same time we would have a drop below the 100 EMA here on the 4-hour chart. So that's why, guys, this probably area could be an interesting one to consider, even though if we see a drop below the lower side of the descending triangle here, still probably an area around here would be a more exciting one for the sellers. But again, if this area holds and we see a nice rebound back to the upside, then, well, consider this to be a possible wedge, especially if it breaks the upper side of it and pushes above the 1.8857 zone. So keep your eyes on this one. Euro Aussie, Euro USD. So a bit of a mess here. So since last time I've touched on this one, it drifted lower, it drifted below this 1.1110 zone I talked about for quite a while last week. So in a way, but to be honest, we could actually redraw this a little bit, because you can see that yes, it tested the upside support line taken from the low of the 1st of October, so that's wonderful, but at the same time it also violated it. So in a way, now we're actually questioning how important this upside line is. So we're probably going to get rid of it. And what we're going to do here is we're going to keep an eye on some of these potential areas of support and resistance. So probably some new ones have to be marked here. So in a way, for us to, let's say, start considering maybe the upside from the short-term perspective, a push above the 1.1103 zone, that's basically the high of yesterday, and such a move would place the pair above, not only above yesterday's high, but also above its 21 EMA on the 4-hour chart. Now, that said, we do have ourselves a nice downside resistance line taken from the high of the 18th of October. It's a bit of a tentative one still, because we only have 2 touches. So in a way, if we get a push above the 1.1103, this in a way increases the chances of a further move higher, but the upside could get limited due to this downside resistance line. So for those who are more on the cautious side, you could in a way just wait until we get a push above the 1.1154, roughly around here, and then target higher areas. For those, like I said, said, short-term traders, yes, this is what you could keep an eye on. So a push above the 1.1103 could, in a way, open the path towards the towards the downside resistance line, and this is where the rate could stall initially. But for the downside, yesterday, or sorry to say yesterday, on Friday, the pair found some support around here near the 1.1071 zone, roughly around there. Of course, we will consider that level. If we see a drop below this, then yep, we will aim for lower levels. But just to be on the safe side, a drop below the 1.106360 zone, roughly around here, guys, could in a way do the trick here for more sellers, because in a way it could also target the 200 EMA, and if the 200 EMA fails on the 200 EMA on the 4-hour chart, if it fails to withhold, then yep, we will aim for the psychological 1.10 zone, or slightly below that, the 1.0989 zone, which marks the low of the 15th of October. So that's basically the game plan for us right now. So, and let me just quickly put this highlighted area right here, because that's going to be our important area of support. If that gets broken, then yep, we will aim for lower levels. Until then, we're going to be very careful here with the upside as well. If we get a push above the 1.1104 zone, roughly, or 304, then yep, we will aim for slightly higher levels. But again, the upside could get limited due to this downside resistance line. But if that fails to withhold, now this is where it could become a little bit more exciting for the buyers. Okay, guys, I hope you found it useful. Thank you very much for sticking around and watching it till the end. So if you want to join me later on at my Traders Tea Time, as always, that's 13:15 GMT. We'll have a look at the some of these pairs again, just to see how everything performed, which way everything moved, and if we were right or wrong. And also we'll have a look at some new ones. But like I said, I hope you join me later on in my Traders Tea Time at 13:15 GMT. If you do have any interesting maybe pair requests, please leave a comment after the video is uploaded. Yep, like I said, guys, I hope you have a fantastic trading day, and I'll see you later. Thank you very much, and bye-bye.